All right, there we go. So, yo, what's up for you guys watching this on the YouTube replay? I do appreciate y'all. I got a good one for you because the market's going crazy today. Literally right now, we are at a new intraday high. And then when I actually combine all my portfolios, we're actually at an all-time high today. If we go to year to date, we're up 7.88% in this portfolio. And let's go check out the other ones. Let me pull up my other portfolios here. Let me see what we're doing year to date in here. And I got different goals with each portfolio. Like in this account here, this is my buy and hold account. When I buy a stock in here, I try not to ever sell it. Today, I did buy one share of Coca-Cola Consolidated right here on that little green buy. But let's go see how we're doing year to date in here. And then we'll get to some of the stock analysis. So year to date, yeah, that's crazy. We're up 25% year to date in that portfolio. And then this is my risky portfolio. This is my growth portfolio, and I think, yeah, here's the year to date. We're up 20% year to date in here, so which is pretty cool. Hey, look at that, $83 of dividends. We do got some dividend pairs in here, like a T Row, Calmaine, Krispy Kreme Donuts paid us a little dividend, but yeah, this is our growthy portfolio. A lot of these companies don't pay dividends. Like, I got a lot of fintechs: Futu, SoFi, Robinhood, Dave. We got Super Micro, Reddit in here, so yeah. And yeah, like I said, I bought one share of Coca-Cola today, and I bought two shares today of as well of ticker symbol BRX, Brixmor Property Group. This is a real estate investment trust. They do like grocery stores. But yeah, also this portfolio is at, I think, an all-time high. We literally started it exactly a year ago. It's a Roth IRA. It's only, $1,000, but yeah. UNH, yeah, we can look at UNH, man. So what apps do you use besides Robinhood? Oh yeah, hey, I use Moomoo right here. I love this app right here for analysis and stuff. It's my main app I do the analysis and stuff on. Let's see if you want to get it, link tree in bio. But let's go look at UN. It's the first link in the link tree in my bio if you want to get it. But anyway, here's UnitedHealth Group right here. As we know, this company has fallen off a cliff recently, and that's because if they get accused of fraud, they're going to get kicked out of Medicare and Medicaid for 5 years. And that's roughly 50% of their revenue. So that's going to really sting if they actually get accused of fraud. But we use them. We're a customer. We use their OptumRx. This is kind of why the government's not too happy with them. I mean, how do you pull this off? In 2020, your revenue is a solid 35 bill, but then it exploded. It's now 133 billion. So they've seen some immaculate growth. That they were one of the best performing stocks before that huge dip right there. And they're making a lot of profits as well. Yeah, 6-7 billion. So the future is unknown. But if they don't get accused of fraud, I mean, this is a steal of a stock. Probably good valuation, nice dividend, good insurance play. And I actually just bought a new insurance stock as well. Ticker symbol PGR Progressive Corp right here. I bought them yesterday, so this is another one of my most recent purchases. I want to actually share with you why I bought Progressive because the financials here are so impressive. I don't know if it'll load here. Okay, there we go. But yeah, they're $250 a share. All right, I guess we'll go to Moomoo for this. I'll bet. Do you own any ETF? No, I actually do not own any ETFs, but I do love ETFs like the VOO, the QQQM. So yeah, here's Progressive Corp right here. The market's pretty close to all-time highs right now, like S&P, NASDAQ, close to all-time highs, but this company isn't. And that's why I just bought two shares of them. They're an insurance company, and look at this growth. The personal lines, which is 81% of the business, the growth is incredible. It's up 24% from the previous year. And also another thing I love is the profits. I like to see that the company's making real profits. And look, they're making 2-3 billion of net income a quarter. They also make so much money that they're doing these special dividends. So they normally have a very low dividend. They just pay you 10 cents a quarter, but then they just did this special $4.50 of special dividends. So that's what's cool. Hey, what up, legend? He said Kava Group. Hey, yeah, that's that restaurant, right? Let's check them out. So, hey, they've done pretty good the past week here. So let's go look at the financials here. Let me verify that this is a restaurant. Yeah, restaurants. Okay. So let's see how they're doing. So Kava, 99% of the revenue. Hey, it's actually grown pretty good. Restaurants are kind of struggling right now. So for them in this environment to grow their revenue 28% year over year, that's pretty good for Kava. Let's see the bottom line. Yeah, look at that. They're actually making real profits every quarter, 10 to 20. Last quarter, they made 80 million. That's incredible. Cash from operations is super strong as well. Hey, I like this one. And they don't pay a dividend, so they retain all that money. I actually really like Kava Group for that right there. The only restaurant I own is actually McDonald's. And if you know McDonald's, they're actually not a restaurant. They're actually a royalty real estate company. I got 14 shares of them. We're up not huge. We're up 6% on them. Yo, what up, Envigas? Where can I learn how to trade stocks? I mean, hey, I make some YouTube videos, but I don't have a course or a book. I don't got none of that. So you got to probably learn elsewhere. But I do appreciate you being here. Let's see. Can you for some of these small market caps, it doesn't really meet the requirement. Like, I don't know if this is a small cap, but we're about to find out. PFAIs, because some of these I don't even want to give like exposure to. So let's see. Yeah, look at it. And this is why. If you look in the top right, the market cap, this whole company is worth $20 million. Like, that's nothing. And they just IPO'd. So this is a $20 million company. Smart farming system. And the revenue is 700,000 for 6 months. Nothing's really blowing me away there. I just really got to be careful with those really small caps. What are your favorite quantum stocks? Well, to be honest with you, man, let me show you the quantum watch list right here. So I think it's toward the bottom, or was it up there? I think the quantum watch list. Anyway, Google, Oracle, IBM, Honeywell, those are like your main quantum names for like going to be the industry leaders, because Google, Oracle, these companies have the money and the talent to be the industry leaders, hire the best people. Because if we look at Qubits, IONQ, these are super small companies. Here's why I kind of stay away from QBTS, even though a lot of people love this one, I just stay away. And it's done great. This is like your main momentum quantum stock. Whenever the quantum stocks are doing good, this one will like momentum up the most. But this is a $5.5 billion company. So remember that this is a $5.5 billion company. The revenue was $15 million the most recent quarter. Like, I know so many like $2 to $3 billion market cap names that have like 10x better fundamentals. So this one is just all momentum. But anyway, point being, let me actually go analyze Google, because I do love this one. I do own them. I think they'll be the industry leader. So let's go check them out, because they're not obvious. They're not a pure quantum play, because they have so many other businesses. They're kind of like an ETF in one. Yeah, what's up? We'll look at Rocket Lab and Palantir. We'll look at all these stocks here. What's up, guys? So yeah, if we look at the valuation here, this company trades at a very low PE. The PE ratio is just the net income multiple plus any buybacks or dilution, but they're trading at 19 times net income. And if we go to the net income down here, they are printing money. The net income actually grew 45% from the previous year, and the sales were only up 12%. So sales are up 12, net income's up 45. What does that mean for Google? That means they're growing their net margins. They now have a 38% net margin. They have a dividend now. The Google Cloud business has been growing like crazy. I mean, if we go to the Google Cloud annual revenue, and they just acquired Wiz. They own Android, they own YouTube, they have the Google Cloud, they're in cybersecurity, they have their own TPUs, GPUs. They just partner with OpenAI. Microsoft's OpenAI just bought a bunch of Google's TPUs from the Google Cloud. So I just really like Google. It's just a buy and hold stock. They're in the search business. They have Waymo. I forgot to mention Waymo, dude. I love Waymo. So let's look at Palantir right here. This is a popular one. The valuation, they're pretty close to all-time highs, but the valuation is the only thing keeping me away, because the valuation is high, but also this company deserves a premium valuation because they're just so growthy. Like, what was the PE? Yeah, the PE is a 600. So not too undervalued. So if we go to where the revenue comes from, 55% of the revenue is from the government. And look at this. The government revenue is up 45% from the previous year. That's incredible government revenue growth. And the commercial revenue is up 33%. This is like with S&P 500 companies. Someone said, where did you go to college? Yo, brother, I'm in college right now. So again, I'm not an expert. Don't listen to me. But if we look at this, they're making net income every quarter. And this balance sheet, this is the best part of Palantir. They have no debt at all. They have a fortress of a balance sheet. So and they don't pay a dividend. They're making a lot of interest on their cash. So that's what I like. Any AI stocks or Nvidia, Microsoft? Yeah, we can look at Nvidia too. What app is this? Yeah, if you want to get this app, it's actually a brokerage. It's in the link tree in my bio. It's the first link there. But let's look at Nvidia right here. Yo, great company. Are they at all-time highs today? No way. Remember all the DeepSeek AI news? The stock fell Like this was a crazy candlestick day, DeepSeek AI, but now, Nvidia's at all-time highs. And here's what's so great about them. I think the market cap's 4 trillion. Hold on, yeah, or 3.97 trillion. Can you believe that? Nvidia's nearly worth 4 trillion, but here's what's so great about Nvidia in my opinion. Obviously they own GPUs. We all know that. They actually have an 18% PC GPU market share. I like getting some of these stats sometimes. They're also in automotive. They have like their own kind of Tesla um or what's it called? Like just the software for autonomous driving. But anyway, this is why Nvidia deserves all the hype around them. Literally in 2020 or 2021, the revenue was 6 billion. Now for the full year or fiscal year 2025, it's 116 billion. I mean, literally the revenue in the most recent quarter was 40 billion. I mean, no other company is growing like that. And if we look at the bottom line, it's not just sales that are growing, but the net income, the profits. They literally are making 20 billion of after-tax profits a quarter. So that's why I really like Nvidia, man. So do you hold any meme stocks? I mean, I do own some risky names. Like I got Robinhood, SoFi, Supermicro, Reddit, but those have good fundamentals. That's what I like about them. So thoughts on the yield maxes? I don't love the yield maxes. Like you basically buy those to maximize your dividend income, like a YMAX. A lot of people like these ETFs for the high income. If we look at the dividend, this has a 63% dividend. But you're not going to outperform the market. They sell calls, and just the nature of selling calls, you just won't outperform the market in the long run. So, but you basically buy that to maximize your dividend income. Yo, what up, Joas? Yeah, if you guys got any stocks you want me to look at, let me know. I'm reading both the YouTube and the TikTok chat. So yeah. Why do you have split accounts, Webull and Robinhood? Yo, I also got Moomoo. I got multiple portfolios. I have a Roth IRA as well. So there's just no burden of having multiple accounts like this. It's just an extra 1099 form at the end of the year. I already get one from PayPal, Google, and all these other places. So just a little extra sheet of paper I hand over. So let's see. Yeah, Nvidia took over the market. So Mighty said, look at BT. Bit Digital. So I don't really, yeah. So $1 billion company right here. Let's check it out. So $1 billion company, they're down 5% on the day, but they've had a nice little week here. But it's still a really small market cap. I'm guessing this might, so they're a cloud service and Ethereum staking. Wow, look at that. I can't believe a company, 3% of this company's revenue comes from Ethereum staking. But anyway, how is their cloud service business doing? It's up 83% year over year. Then they're in it. Yeah, so half the revenue comes from digital asset mining, which is probably Bitcoin, or maybe they just mine Ethereum and then they just earn the yield off the Ethereum. Anyway, this just looks like a crypto proxy. And yeah, look at that balance sheet, man. No debt, lots of cash, or lots of assets. And I bet you those assets are the crypto that they own. Yeah, because they only have 61 million of cash. Those other assets got to be their investments. So hey, that looks like a little crypto play there. So yeah, let's keep going here. So AMD, someone said, yeah, we can look at AMD as well. I do own that one here in my portfolio. I am up on them. This has been one of our better performers. So yeah, or not really better performers, but since the huge April dip. Yo, what up, Bluey? Yeah, we just looked at BT. Yes, sir. Yeah, if you guys got any stocks you want to look at, let me know. I got you. But yeah, from the April dip right here, I can't believe AMD was like $80, $85. And now AMD's $140. Now, we do own 12 shares of them. I might be a little biased, but we just looked at NVIDIA. Now, let me kind of compare that to AMD. And AMD has been underperforming NVIDIA because NVIDIA is at an all-time high today, but AMD is not at an all-time high today. And here's what I like about them. Obviously, they sell GPUs as well. They have a 16% PC GPU market share, but AMD is now really a data center play. Half of AMD's revenue literally just comes from their data centers. And look at the growth here. The data center revenue is up 57% from the previous year. I mean, that's what I look for in a company. Ones that are growing their fundamentals an incredible amount. And then if we go over here and look at the net income's up 400%, 700 million of net income. And if we look at this balance sheet, another fortress of a balance sheet company. No net debt on this company, lots of assets, lots of cash. Cash is earning cash because of the high interest rate environment. See, that's what's so great about this higher interest rate environment. If you're a cash-rich heavy company, you're just earning interest on your cash right now. Like Meta, for example, dude, Meta prints money just from their interest. And I'll show you that in a second here. And Google too. But here's what's so great about Meta. They just hired, I should show you. They have an app called Threads. Threads is now nearing the same amount of daily active users as X, which is pretty crazy. But yeah, if we go to their daily active users, because they own Instagram, Facebook, they have 3.5 billion daily active users, which is crazy. And if we go to the bottom line here, this is the best part. is this. They made 16 billion of net income in the most recent quarter. What software is this? Hey Trev, can you go into the description? I don't know if you can, but if you go to the link tree right there, it's the very first link there. It's actually a brokerage if you want to get this app that I'm on right here. Yeah, I love it for all the analysis. But yeah, they're making a lot of net income. The net income grew 34% from the previous year when the revenue only grew 16%. So what does that mean? Meta's expanding their net margins. This is a $2 trillion company and they have a 40% net margin. So that's incredible margins on Meta. Yeah, it's a free app here. And another cool feature, Trev, you can do, like you can check all the super investors' portfolios over here. Like if y'all know Nancy Pelosi, Warren Buffett, these are super investors. And literally by SEC law, they have to make all of their trades public. Like we can see literally exact days and stuff of all of Nancy Pelosi's trades and stuff. And we can see her portfolio. You know, Nancy Pelosi's largest holding is Apple, then Amazon, then Google, Salesforce, Microsoft, Netflix, CrowdStrike. These are some popular names right here, but yeah. Shop. Oh, what up? Actually, we'll check out. I saw this one first, and then we'll look at Shopify. Man, check BORR Drilling. Yeah, what's up, guys? If you got any stocks you want to look at, let me know. I'll check them out for you. So here's Board Drilling, and congrats if you own any stocks. The market's pretty close to all-time highs right now. So anyway, this is a small company. If you look in the top right, they're a $555 million company, so that's not huge. And the stock appears to be at like a close to all-time low. So let's see if we can figure out why that is in their financials. So the revenue did decline 7.5% year over year. Ooh, but they lost net income on that. That's tough. Yeah, look at that. They're always making net income. Then they lost 17 million the most recent quarter. That might explain why the stock is falling. You know, this is look at that. They have an 11% dividend yield. When you lose net income, you know, you can't even afford to pay a dividend. So that's rough. So I'd be careful with this one. Again, $500 million company. They just lost net income. Hopefully, if they can get back to making net income every quarter, that'd be great. Those are a $500 million company. And they were trading at 10 times net income. They had a very low valuation. So let's look at Shopify. And then, Bluey, we'll look at OST. I got you. So for Shopify, this is a classic, what's it called? Who owns that? Kathy Wood. That's who. I'm slow. So if we go to Kathy Wood's portfolio, you know, she owns ARKK, that ETF. Here's our annual revenue growth. This is what's incredible about Shopify. You know, in 2019, revenue was 1.6 billion, but not for the full year 2024. It was 8.88 billion. So incredible annual revenue growth. So and yeah, if we go to the revenue, it's up 26% year over year. The net income's a little choppy, but if you average out the 4 quarters here, they are on average making more net income than losing. The free cash flow I know is incredible as well. Yeah, look at that free cash flow, man, up 56% year over year. And they have this really good balance sheet. Let's see, what about OST? Yeah, let's look at OST. And yeah, Luca, dude, TikTok just took down my live stream. So, and I sent in an appeal and they haven't appealed it yet. So, oh well, for the TikTok stream. I might actually go stream on my second account. Should I do that? I don't know. Anyway, so I don't know OST. Unfortunately, yeah, Bluey, this stock doesn't look like it's doing too good. It's down. Look at that candlestick. So yeah, I don't know what happened there. What's the market cap? Yeah, $15 million company. So they're worth 15 million and they lost 6 million the most recent quarter. Sales of display modules. And yeah, look at the annual sales decline. You know, 2021, it was 100 million. Now it was 18 million for the full year. So not great. So, actually, yeah, I'm going to log into my second TikTok account real quick. And then we'll get back to the stock analysis. It should only take one more second. Yeah, is that the password? Okay, so hold on one second here. I gotta go to the Gmail app and hit log in real quick because I'm logging into my Gmail. Just literally the screen's gonna be black for 10 seconds, then I'll be back. Oh, this sucks. TikTok took down my stream. This is why I appreciate y'all being here on the YouTube stream because TikTok just keeps on taking down my stuff. Oh yeah, good thing I didn't show that. It just like showed my address. Okay. All right, we should be back on the screen. Okay, I appreciate y'all being here. Okay, here I'll show you my portfolio. But let me just go back to Robinhood so we can see how the market's doing right now. Are we still at an intraday high? Pretty close to it. You know, the market's doing great today. All right, it's a known pump and dump scam. I wonder, yeah, dude, the small market cap, the net income losses. I mean, That just looks like a super risky investment. All right, we're back live on TikTok. I'm on my second account right now, so we're officially back. Sorry for all the commotion. Here, I'll show you what my growth portfolio is doing. So yeah, here's my growth portfolio. How are we doing all time? I just like being fully transparent. I'll show you every stock that I own, how much I'm up and down on them. I've had this portfolio for like 2-3 years, and if you look in the top left, open profit and loss, we're only up 11% all time. We have definitely underperformed the market to be only up 11% all time. So that's one thing I will be clear. But yeah, in this account right here, we just got a lot of growthy names in here. This and T-Mobile reports earnings today. I have a lot of shares actually. I got 5 shares of this company, T-Mobile. T-Mobile reports earnings today, and this is an incredible stock in my opinion. The PE ratio is a 22. So first off, the PE is really low. And let me show you this right here. Here's the best part about T-Mobile people don't understand. Look at this net income. They're making easy $3 billion of net income a quarter. And the sales grew 6%, but the net income grew 25%. The real story here of T-Mobile is this margin expansion. I mean, look at this. In 2021, single digit margins, 3, 4, 5. But in the most recent quarters, I mean, they're printing double digit near 15% net margins on T-Mobile. So I am bullish on this one. They also partnered with Starlink. T-Mobile has a partnership with Starlink. But if we look how much the dividend costs, because they pay a dividend, it only cost $1 billion and they're making $3 billion. So what are they doing with all their leftover money? T-Mobile is a share buyback machine. Look at this. Most recent quarter, they spent $3 billion buying back their own stock. The quarter before, they spent $5 billion buying back their own stock. So that's why T-Mobile has been such a shareholder-friendly company with this crazy returns, and that's why I didn't mind buying them on this little dip right here. Actually, I'm down on my position, so you could technically get in a little lower than me, but they report earnings in an hour and 25 minutes, so that'll be interesting. They're either gonna go up or down a bunch. So here's an incredible company right here. Yeah, what's up, Luca? This is Duolingo, Duol, and I love the growth of this company. Now they have just been falling a little bit recently. Like the market's at all-time highs. This isn't at all-time highs, so maybe this one isn't an attractive valuation. But check this out right here. This is the best part about Duolingo. I love subscription model companies, and look at this subscription growth. You can't make this up. It hits a new record every quarter. It's up 45% from the previous year. I mean, this is what I call like monster growth. So anyway, Duolingo is one that I think is a really good, you don't want to have a huge chunk of your portfolio in there, but I think they're pretty good buy or put on your watch list. They're also an advertising company. How's that doing? Ads or advertising went up 39% from the previous year. Let's go. And look at that. They're profitable on this too. They made $100 million of free cash flow in the most recent quarter and $35 million in net income, up 30%. So anyway, that's what I really like about Duolingo. They're profitable. They're growing. They're a subscription model. So yeah. Delta Airlines, yo. So this is out of all the airlines, I will say Delta is the most well-run airline. But that being said, this isn't a company that'll outperform the market in the long run. Like I'm just not that bullish on airlines. These are like fun to swing trade, like if travel boom comes back or whatever tariffs. But for just they're federally regulated. I just don't think this will outperform the market in the long run. Like, look at this. Delta Airlines is lower than they were in 2017. So if you bought the stock in 2017, you might be a little down on your position, which sucks. But I will say they've started to recover their net income. Like if we look at the 4 quarters, they've made net income every quarter in the past 4 quarters, which is great news. So they're really profitable. I think the PE is really low. What's the PE on this company? It's an 8 and the industry average is an 11. So low valuation, but yeah, I just don't expect this kind of company to outperform in the long run. You get a 1% yield there. So let's see. What up, Anthony? He said CAG stock. What's this one? Congra brands. So unfortunately, dang, look at that. Stock's like all-time low. That sucks. Let's see if we can figure out what happened to this company. What's the market cap? They're still a $10 billion company. That's really good. So grocery and snacks, frozen and refrigerated. So let's see. Yeah, so it's just the business is declining, but not that much though. Like sales are down 6.5%, not the end of the world. And they're still technically making net income every quarter. Dang, they did really lose 500 million that one quarter. I do wonder what happened that made them lose 500 million. But every quarter since then, they are making net income. So yeah, I'd just be careful the slowing growth. Yeah, this dividend's gonna have to get cut. Look at that. They have a 7% dividend, and the payout ratio is a 200% payout ratio. How much do they pay a quarter? Well, say they pay 35 cents of EPS a quarter. Let's see, what's the actual EPS? They pay 35 cents a quarter. They only made 30 cents in the most recent quarter, but they did make 60 cents last quarter. So it's tough. It's tough. What about Bitcoin? Yeah, dude, Bitcoin, congrats if you own them. Or let me actually just pull up actual Bitcoin. BTC, 109,000 right now. So yeah, here's a cool feature about Bitcoin. It's not like a stock. Bitcoin doesn't report earnings. Bitcoin can't miss on their net margins. So that's a kind of a unique feature about Bitcoin. And total risk on asset near all-time highs today. Pretty much all-time highs. I mean, $2,000 off all-time highs. So yeah, congrats if you own Bitcoin. They've been one of the best performing assets. Which broker are you using? Yeah, this is called Moomoo right here, Rohan. If you want to get it, it's in the link tree in my bio right there. First link, I'd appreciate that. It's affiliate link. But yo, what up, Tosin? Yeah, if you guys got any stocks you want me to look at, let me know. Yo, what up, Katrina? How's it going? BBAI, Nebius. Let's look at NBIS. I saw that one first. So I think this is a company owned by Nvidia. So we'll check out Nvidia's portfolio after this because they have to make it public. But let's see. Nebius AI, they own, 58% of the revenue comes from Nebius, then Triple 10. I don't know what any of this is, but let's see the revenue growth. Well, actually, this is really impressive. I see why people like this one. The revenue, look at that revenue growth. Wow, actually, it's up 585% from the previous year. So that's incredible growth. They are still losing net income every quarter, like 100 million, but that's all right. You know what? Let me go check Nvidia's portfolio. So yeah, as we know, Nvidia owns a lot of CoreWeave, ARM, APLD, and yeah, look at that. After APLD, they do own some Nebius. So NBIS is owned by Nvidia. Obviously, their main holding is CoreWeave. CoreWeave just bought CORZ. It's like one of the main Bitcoin mining companies out there. So they sold Chef Boyardee. Oh, really, Anthony? I didn't know that. Hey, let's see, BBAI. So yeah, this isn't one I love. So I don't. Yeah, $2 billion company. There's a lot of momentum in this name. Don't get me wrong, a lot of momentum, but I'm not seeing the financials here. So they're in cyber and engineering analytics. So for the full year, the revenue was up 1.9%. I mean, let's see. They're losing, dang, the past year they've lost over $200 million. So they've lost over 200 million of net income, and they were worth like 2 billion. Yeah, 2.1 billion. So they've lost 10% of their market cap in net income in the past year. So they really need to. The stock doesn't care though because they're probably diluting you and fortifying their balance sheet. I know that they did that. Yeah, look at that. In the most recent quarter, you see how this balance sheet way improved, their liabilities went way down? They were genius. Up here, what did they do? They diluted the shareholder by like $100 million. So anyway, that's just not, I'd be careful with that one. It could be a fun little swing trade or something. Do you believe you can time the market with charting patterns? I mean, you can. It's definitely possible, but I don't. I don't try to time the market. Time in the market beats timing the market. And that this is actually, if you look in the top left, it's called buy and hold portfolio. This is my buy and hold portfolio where pretty much once I buy a stock in here, I try to literally never sell it. I do have some other portfolios. Like here's my swing trade portfolio and my growth portfolio. Sometimes I'll take profits, sell some companies. Like I took a massive profits on Dave, sold that at 272. Robinhood, one of the best performing stocks of all time. No, my best performing stock of all time has been Robinhood. I sold most of my shares, but the few shares I have left, I'm up 580% on them. And like SoFi, a lot of these fintechs have been going nuts recently. Let's see here. What up, Jake? He said, do QSR stock. Yeah, and by the way, if y'all want to support me, I don't sell anything. I don't have a course, a book. Only thing I do have is a YouTube channel. So if you want to help me out, go subscribe to my YouTube channel. It's called Nathan Roberts. So here's Restaurant Brands International. I believe they own Burger King. Let's go find out. So they own Tim Hortons. Yeah, look at that Burger King right here. So 17% of the revenue comes from Burger King. They own Popeyes as well. So they own Popeyes Chicken, Firehouse Subs. I don't remember the last time I've been to a Firehouse Subs. How's Popeyes doing? I love Popeyes chicken. Yeah, look at that annual growth. I mean, that's some very solid growth on Popeyes. How about Burger King? Yeah, Burger King's been struggling. Sales are down bad since 2019. McDonald's is really eating their lunch. But yeah, if we go to the net income right here, that's rough. So dang, so the margins kind of just fell. That might be why the stock is struggling and kind of flat on the 5-year. The net income fell 32% year over. Don't get me wrong, they're still making a boatload of money, a couple hundred million net income, but They have a nice yield of 3.5% dividend. I love how diversified that they are, though. Tim Hortons, Burger King, Popeyes. Yeah, Tim Hortons, the sales are down 4%. No big deal. So yeah, that's a restaurant play. I own McDonald's actually. McDonald's is like they're actually a real estate royalty company. If you go spend $100 at any McDonald's, $4 of that goes back to this parent company as a royalty. They also own 80% of the land under the stores, so they're actually a real estate play. If they converted to a REIT, they'd actually be in the top 10 largest REITs in the US, which is pretty cool. Yeah, look at that. We're almost at a new intraday high right now. Congrats if you got any stocks. What about our Roth IRA? Hey, Roth IRA is up 0.75, not bad. How's the S&P doing? S&P's up 0.5%. Look at that. Look at that little rally. So nice. Show your hold portfolio. Yeah, here. Yo, if you want to see my entire portfolio, go to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. I go over my stock portfolio all the time. I just made a video of the 3 most recent purchases I made. I made a video yesterday of it, of 3 stocks I just bought. New positions. One of them was Progressive Corp. Another one was PSIX. Oh, and T-Mobile reports earnings in an hour. So that'll be fun. Oh, yo, question mark said, can you look at PSIX? You know what, since we're here, I got you. So this is one of my most recent purchases. You can see my little buy order right here. That's when I bought the stock. They had a huge decline yesterday. They fell 14% yesterday, but here they are now up 10%, just a huge momentum play. And also, if we zoom out on this company, we pretty much bought this stock at all-time highs. In my opinion, I expect this is the kind of company to just keep on hitting new all-time highs. Again, not financial advice. I'm not an expert. So they're a $1.6 billion company. So very small market cap, a lot of potential to grow their market cap. But the main reason I like them, I'm a fundamental investor. I love looking at the financials, and they're printing net income now. So if we look at the revenue's up 42%, pretty good. But the net income grew 168%. That means they're now growing their margins. Look at this margin expansion. So anyway, this is one I like from a financials point of view. There's also a bit of momentum. Maybe you can do some technical analysis, but I'm just holding on. Again, with this kind of stock, you don't want to have a huge position. I'm starting as 5 shares. I'm only going to buy more shares if I'm down 10%. I need to be down over 10%. Wow, for you pay chain close to home, I work for them. No way. Do you really? Someone said in the chat they work for PSIX Power Solutions. Do you really? Hey, hopefully you got some stock-based comp. The stock's been doing pretty good. Well, I mean, they're only a $1.6 billion company, very small market cap. Is it okay to invest only in the VOO? Absolutely, man. Sometimes I think, just buy VOO and take a vacation. This is the S&P 500 right here. On average, you should just get 7 to 8% of your money back a year. The past couple of years, it's been more than 8%, but it diversifies your money up for you. You don't need to buy individual stocks. It breaks your money up for you into all the top 500 companies. So yeah, I love the S&P 500. Or if anything, that should be like the backbone of your portfolio. Then maybe you could play around with some individual names. Austria said my top 5 best growth stocks. He has Hood, CoreWeave, Meta, Axon, Palantir. All those names are great. Amazon, AMD. We'll look at Amazon real quick because I actually have been buying the dip on this company. I just bought a share right on the dip at 208. But let me show you what I love about this company. So Amazon, they're so innovative. They're growing their margins. This is a company you probably just want to own. So a lot of people know Amazon for their website. Here, I'll show you this right here. So a lot of people know Amazon for their website, their online stores. That's only 38% of the revenue. Then they have their third-party seller services. Then the Amazon Web Services. Now, this is a high-margin segment of business. It's now if we go to the annual revenue here, it's now over $100 billion of annual revenue for Amazon. They're a cloud provider. They have the #1 market share, and the margins are just insane there. And then, of course, they have the advertising services. They own the Twitch streaming. And they have a subscription revenue. Obviously, Amazon Prime. Hey, it's like Amazon Prime Week or something, right? But anyway, the best part about Amazon is the margin expansion story here. The sales are up, crazy sales, 155 billion. So it's just naturally hard to grow that huge number. But sales are up 9% year over year. But the net income, the bottom line, is up 65% year over year. So if you go to their net margin, it's now an 11%. That's the highest net margin ever. If we zoom out, they were struggling. They had single digit margins, even losing money. But now they have an 11% net margin. Amazon's doing great. So, the majority of my money is in SPMO. What's that one? Is that an ETF? SPMO? Oh, yeah. So the Invesco S&P 500 Momentum ETF. Wow. This one maybe is performing better than the S&P 500. What are their top holdings? Nvidia, Meta, Amazon. Uh, JP Morgan, Walmart, Netflix. Yo, congrats, dude. That one's done great. So yeah, someone said Philly said, what about KALV? Yo, let's check this one out. So I don't really like covering the small market caps. Yeah, if you look in the top right, they're a $780 million company. But what is this right here? This app is telling me, what is this? A megaphone bottom. And hey, it says the rise probability is a 95% chance. So hey, hopefully that's true, right? But let's go see what they do. Pharmaceutical play, obviously. Do they have sales? So they do not have sales right now. So this is a revenue-less company. This is from 2020. So this is really old data. Because if you go right here, so right now they don't sell a product or a service. They're a revenue-less company. And they're losing $50 million a quarter. No. Yeah, stay away. In my opinion, stay away from this one. They lose 40 to 50 million a quarter, and they're only worth 780 million. But the stock's done pretty decent. Oh, I mean, not on the weekly, but anyway, yeah, nothing's really blowing me away there to really want to buy them. Small market cap, pharmaceutical. Um, so we'll check out this one as well. What up? Caden said AZ in stock. I love the app around. Yeah, if you want to get this app, I'm on. It's in the link tree in my bio. It's the very first link there. Here, actually, it's a brokerage, but it's in the first link there. Anyway, here's AstraZeneca. So I've never heard of this company before. So huge, wow, a huge company. This company's worth 219 billion. So let's see what they do. They're a pharmaceutical play. Okay. What country are they from? Well, let's see. We click on market. So 40% of the revenue comes from the US, then China, United Kingdom, and rest of the world. Okay. Yeah, wow. Look at the annual sales here. For the full year 2024, the revenue was 54 billion, up 18% year over year. What about the bottom line? Yeah, they made 3 billion of net income in the most recent quarter. So revenue's up 7, but net income's up 33. Wow, that margin expansion is crazy. 21% net margins on AZN. And a dividend. Hey, a 2.2% dividend on this company. Not too shabby. Robbie said Riggedy. Yo, what is it? That's that quantum name. What's the ticker symbol for that one? I'll maybe check it out. Time to buy Zscaler or CrowdStrike? Yo, Nancy Pelosi's been buying CrowdStrike. Hold on, let me go to her portfolio real quick. So as you know, Nancy Pelosi, super investor, has to make all her trades public. And yeah, look at that. 4.20% of her portfolio is in CrowdStrike. This is a cybersecurity name, probably the best one out there, or top 3 best cybersecurity names out there. Like literally 80% of the S&P 500 companies use CrowdStrike in their cybersecurity software. So they've just seen immaculate growth. So the revenue's up 20% year over year, but they're in some litigations right now. Their software went down and they're losing net income right now from lawsuits, like from a lot of companies, from Microsoft, Delta Airlines. A bunch of companies are suing CrowdStrike because their software went out. It literally made every plane in the sky in the U.S. I still remember this day. It wasn't that long ago. But it made every plane in the U.S. sky have to land temporarily because their software went down. It wouldn't allow Windows computers to work, and the stock tanked, and they're seeing litigation. But anyway, the stock doesn't care. It's at all-time highs. That's the only reason that they're losing net income. So a year ago this month, oh, dang, yeah. Y'all remember that CrowdStrike thing? That was crazy. Yo, Zio, what's up, brother? Thanks for the rose there, dude. Appreciate you. If you got a stock you want me to look at, let me know. You think AZN could be good buy? Yeah, dude, I like the 2% yield. That's a pharmaceutical play. So let's see. Dante said NXT stock. Let's see. Oh, we'll look at Zscaler too if you want. So this is Nextracker. What app? Yeah, hey, Nash, if you want to get this app I'm on, it's actually a brokerage. It's in the link tree in my bio. It's that very first link there. But anyway, Nextracker, this stock, they appear to be close to an all-time high. They haven't been public for that long, but $9.4 billion company, pretty nice market cap there. Yeah, the sales beat expectations, nearly $1 billion of sales. Yeah, they triple beat on earnings. Wow. Hold on here. So if you go to the revenue, it's up 25. And yeah, look at this net income right here. They're printing easily over 100 million of net income a quarter. And they don't pay a dividend, but yeah, dude, they're very profitable, making a lot of money. Wow, the balance sheet, their liabilities are going lower, assets are growing. So their assets to liability ratio went from a 60 to a 50 in 1 year. The CFO, the free cash flow just grew 112%. I can see why that one's close to all-time highs. Is 20K in VOO good? Yo, that's amazing, dude. Yeah, that's the S&P 500. Let's see. Apple doesn't have room for growth. Google is making better strides with Waymo innovation. Yeah. I do own Google and I don't own Apple. I will say that because Apple has this App Store problem. There's going to be a huge decline to the Apple's services business, which is their highest margin segment of business. Well, I'll just analyze Apple for you. 50% of the revenue comes from the iPhone. They have a huge market share. Like for all the smartphones in the world, 19% smartphone market share. So a lot of people are locked in the Apple ecosystem. I'm on an Apple device. And here's why Apple is so heavily affected by tariffs. And did y'all know this? Literally only 36% of their revenue comes from the US. And then they're in EU, China, and all these other countries right here. So that's why Apple's so affected by tariffs, but they're still printing money. Look at that. Apple's making 20, 30 billion a quarter. And they have the largest buyback program of any stock. Google has the second biggest, but Apple spends $100 billion a year buying back their own stock. Is this being saved to your YouTube channel? I'd love to tell. Yeah, hey, Joas, yeah. If you missed anything or want to replay the live after the stream's over, yes, sir, you'll be able to replay it. So yeah, hey, if y'all want to support me, make sure you subscribe to my YouTube channel and hit the like button. I appreciate that. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm streaming on TikTok and YouTube right now. I am reading both chats for stocks. So Zio said CNK. Yo, Zio, thanks again for the roses there, dude. So Cinemark, let's check it out. So, or Cinemark. So $3.3 billion company trading at an 18 PE. Unfortunately, they are down from 2019. But let's go look at the fundamentals here. They are profitable. So admissions revenue and concession revenue. So what is this company? Is this like a movie theater? Motion picture exhibits. So maybe Cinemark. Yeah, that's a movie theater, I think. I don't know. Anyway, admissions revenue. How's that doing? Decent. Concessions revenue, selling that high margin popcorn. Normally, they are making net income every quarter, but in the most recent quarter, they did lose money. They lost 38 million. Was that real? Yeah, that was real. So we want to see them get back to net income positivity. They are a bit leveraged, but hey, I'm actually surprised. For Cinemark to actually be having this much profits at all. I mean, if you average out the 4 quarters here, they're making like over 60 mil a quarter, and that's why the PE is so low. They're trading at an 18 PE, so they're interesting. What's your best stock? GDRX. My best performing stock has been like Robinhood or SoFi. But my most recent purchase of a stock has actually been PGR Progressive. Just bought 2.4 shares of them. So yeah, or where's my Robinhood position? Robinhood's been our best performing stock. Yeah, we're up like 580% on them. This is our like growthy risk portfolio. So anyway, let's go back to GDRX. Yo, what's up, RG? So this company, GoodRx, they're a $1.8 billion company. So, and dang, we zoom out, the stock is not done too great. But let's go look at the financials because that's what I like to look at. So they are actually making net income. Hold the phone. So yeah, the revenue's not growing that much, 2.5% growth, but the net income is the real winner here, man. They made 11 million of net income in the most recent quarter. That's crazy. What about free cash flow? Yeah, dude, free cash flow is pretty decent as well. EBITDA, yeah, they're making like 50 million of EBIT. So they're actually not too bad. If they can keep up that net income, that margin growth, I mean, they could actually do really good. But I want to see the sales go up. Yo, Blue41, thanks for the roses, dude. Yo, if you got a stock you want me to look at, let me know. Bob the Fish said PNN is oversold. Time to buy. PNN. Let me know which one you're talking about. Is it Power Minerals or is it a Canadian? Is it an Australian company? Let me know which one you're talking about. So someone said, "What are your thoughts on Tesla?" Yo, I don't love Tesla to be honest with you. Let me see your one. So the thing with Tesla is the valuation is so high because of the future growth. Like Tesla's most of their market cap in the future is gonna come from their robo-taxi and their robotics division and stuff, right? But for right now, the company is ridiculously expensive. They've lost all growth. The PE is 170. Their total vehicles delivered are down 14% year over year. And if we just look, 85% of Tesla's revenue comes from their automotive business, and that's actually down 15% year over year. So what I'm saying is they've lost their growth, but the market cap is going to come from the robots and robotaxis. Also, they lost their margins. That's actually the worst part about Tesla's earnings, but the stock doesn't really care. But look at the net income. the sales first. So the sales are down 9%. So sales are down 9, but the net income is down 70%. And that's real. Like it's not just like some one-time adjustment. And if we look at the net margin, it's only at 2%. So it's rough. It really is rough in my opinion. But yeah. If I get let me go. Yo, Eli, what do you think about that, bro?
Yeah, so Tesla to the moon. This is a $5 million stock. Wait,
Yo, hopefully we don't get in trouble. Okay, so let's go look at the next stock here. I'm holding a bit of CNK, but it's not doing too well right now. Yeah, this might be an obviously. Can you look up Palantir for me? Yeah, we can look at Palantir. Hey, and RG said his best performing one is Palantir. They're up 1,500% on 400 shares. Dude, you have an incredible cost basis to be up 1,500%. So let's go look at Palantir right here. You know, this one, the only thing that's like obvious about Palantir is the high valuation. They are a bit expensive, you know, a 620 PE, but here's why they might deserve the high PE. You know, half the revenue comes from the government. If we look at the government revenue, it's seen some really good growth. You know, the government revenue is up 45% from the previous year. And then the other half of their business actually comes from commercial, like S&P 500 companies. And that's up 33%. So both segments of business are growing like crazy. And they're really profitable. They're making net income every quarter. And they have no debt. I mean, this is a fortress of a balance sheet right here. And they have so much cash that they're earning interest on their cash as well. So, yeah, I like Palantir. Brady said, thoughts on AMST. What is this one? I've never actually heard of this stock. So Amosite. So yeah, unfortunately the stock's at an all-time low or kind of close to it. Yeah, so I don't really like to cover these kind of stocks on here. They're only a $15 million company. So the whole company's worth $15 million. And look at that, they're losing $1 million every quarter. The sales are 30,000. I mean, yikes. Yeah, I don't know about that one. So let's see. Dante said, NUVB, the CEO, recently sold a almost identical company to Pfizer. Well, this is an $800 million company. I don't know what that means, but oncology development, there's not, yeah, they're losing a boatload of money. They're losing over 50 million a quarter, and the sales are 3 million. So, not great there. Yo, MM Shally. Yo, if you want to get this app, it's actually a brokerage. Go to the link tree in my bio. It's that very first link there if you want to get it. Free app. It's fun. I love the analysis you can do on it. It's a brokerage, but thoughts on BNM? What's BNM? What's the ticker symbol? Joe says same for RCAT. What is RCAT? And yo, I forgot we can look at SEMR and these other stocks. So Red Cat Holdings, I think this is a drone company. So yeah, if we look in the top right, another small one, yeah, $600 million name. I don't love that. So $600 million company. And what are the sales? 1 million. Yikes. And the sales are down 61% from the previous year. So, and they lost 13 million. So the balance sheet just got all leveraged up. So I'd be careful with RCAP. Can you earn money? Is it like crypto? I don't know what you mean there, Unknown X. So we're just looking at stocks here, you know. Yeah, you know, a lot. I have a growthy portfolio right here. Some of these growth stocks are like altcoins, you know. So you got to be careful. You can't put a huge chunk of your money in them. You know, some of these stocks are even more risky and more volatile than a lot of crypto. So anyway, yeah, I just love growth companies. These are all my growth stocks in here. And then I also have a dividend portfolio. If we head over here to my main taxable account, this is my dividend growth portfolio. And all these companies pay a dividend, but most of these are like dividend growth stocks, like a Google, a Meta, McDonald's, Constellation Energy. What about a Roth IRA? We're up 0.8% in here. Not bad. I don't actually own any crypto. I own some like Robinhood and Fintechs that move with crypto, like FUTU. Yo, hey, what up? We'll look at SoFi as well. Yo, what up, Soy? How's it going, man? So here's SoFi Technologies. Yeah, this one was at a 52-week high yesterday. So congrats if you own SoFi. I do own SoFi as well. But let me show you why I believe this one's going to continue to be a winner. So this is a fintech. You know, they have their own banking charter. And look at this right here. the financial services right here has seen incredible growth. I mean, this is what I look for in a company. If I'm just going to buy and hold shares, I want to make sure that it's a good growing company. And here, SoFi, their financial services revenues literally doubled. It's up 101% from the previous year. Same with the lending revenue. Lending's up 25% from the previous year. So anyway, both main segments of SoFi are growing like crazy, and they're profitable every quarter. They're making net income every quarter, when if we zoom out to last year, they were kind of losing net income every quarter. So we've really seen SoFi turn around the business, and that's great news. People are starting to really take them serious. Hope your day goes, hey, thanks, Unknown. You too, brother. Hope you have a great rest of your day. Thanks for being here. Symbol BME on the London Stock Exchange. BME. Let's see if we can. What's it called? Is it BlackRock Health Sciences Trust? There's so many ticker symbols with that name. Yeah, I don't know which one you're talking about there. Is it Bar Seal Minerals Corp? I don't know. Hopefully not that one. That one's at all-time lows. Soy said, why ticker symbol YOU? They're a terrible company. So yeah, has anyone heard of Clear Secure before? This is, if you've ever been to a airport in the United States, you ever see like someone wear a clear shirt? They have these like biometric scanning devices at the airport where you can like bypass the line quicker. Maybe you've seen Clear Secure before. They're a unique company. Not many companies get the privilege to be in airports and federally regulated. But anyway, $3.8 billion company. So very small market cap. But someone said you is a terrible company. It might be, but here's why I own him. Look at this net income after tax profits. I mean, look at this money they're making. This is real net income. They used to lose money. Now they're making net income of 20% year over year. Sales are up 18%. I mean, look at that. The sales are doing great. So anyway, that's why I like Clear Secure. You also get a dividend. They also paid me a special dividend like a couple months ago. So anyway, that's why I like ticker symbol U. What to buy in this traffic? Oh, dang. Wonder is stuck in traffic. Need to cover a 20K loss. Ooh, yikes, dude. That's rough. What to buy? I mean, I don't know, man. I mean, I'll show you what I bought today. This is just buying shares of, and I just have the intention to hold this on for the long run. Here's one company I bought today, right before the stream, is ticker symbol Coca-Cola, or ticker symbol Coke, and this is Coca-Cola Consolidated. In the Wi-Fi, I don't want to. Okay, there we go. So yeah, all these little buy orders on my buy. So I did buy one share of Coca-Cola today, and I also bought 2.7 shares of, or 2.4 shares of Progressive Corp, ticker symbol PGR. I actually made my most recent YouTube video is about why I bought Progressive Corp. So I think you'll like that. They traded a 6% earnings yield, 10% free cash flow yield. They do special dividends. They're growing like a maniac. So Progressive Corp is great. So here's Eli Lilly. Someone said Eli Lilly breakdown. You'll love this one, Anthony. So yeah, we all know Eli Lilly. They sell all these popular prescriptions. Like, that's where all the revenue comes from. And here are all their prescriptions. Like, they own Mounjaro, Zepbound. Zepbound right here has been the most incredible performing like prescription of all time. I can't believe it. Like, look at this. They started it a year ago. It didn't exist. In 2023 Q4, they started it. It got 175 million of sales that quarter. And now, in the past 3 months, it has 2.3 billion. If you're wondering what is Zepbound, this is the competitor to Ozempic. So it's like a weight loss prescription. But anyway, it's seen incredible growth. But look, like Mounjaro, how's that one? Yeah, even this one. Look at the growth. It's up 112% from the previous year. So Eli Lilly is just an incredible growth company. His sales are up 45% from the previous year, and it's going to keep on growing. They're printing money, a couple billion every quarter. You get a dividend. They're doing buybacks. So I like Eli Lilly. But there is, the government is a little bit strict on healthcare right now. Yo, Soy, thanks for the rose there, dude. I've always had problems with them. Oh, really? With Clear Secure? That sucks, dude. I remember when I went to the airport, when I went to Vegas recently, like a couple months ago, the Clear Secure line was longer than the normal line. So I'm like, well, that's bullish for Clear Secure, and they told me just to go in the regular line because it's moving faster than the Clear Secure line. I guess that means a lot of people are using it, but anyway. Someone said, I'm betting on NVTS, APLD. Tell me about this. Yeah, those are both NVIDIA companies. Yo, NVIDIA just had a huge partnership with Nvidia Semiconductor and APLD. So if you go to NVIDIA's portfolio right here, because NVIDIA makes all their trades public, they own CoreWeave, ARM, and then their third largest holding is APLD. Oh, yo, Soy, we'll look at ESLT after this. I got you. So here's APLD. Nvidia does own this one. This is your main, like, or not main, but a huge cloud service provider, and it's growing like crazy. The cloud service business grew 220% from the previous year. So that's incredible growth on the cloud service business. And they partnered with CoreWeave as well. APLD just partnered with CoreWeave. So I like that one for the growth, and Nvidia owns part of it. So APLD is interesting though. I don't know if I'd have a huge chunk of my portfolio in that one though. But let's look at ESLT. Thanks again for the rose there, Soy. ESLT. And yo, Jeff Mack, good to see you, brother. We'll look at eBay. Yo, I haven't looked at eBay like in a long, long time. We'll look at eBay as well. Wow, look at this stock right here. This company is nearing at an all-time high today. So, geez, congrats if you own this one. You got to be up on your money. They're a $21 billion company, so not huge. Or, well, there could be more room for them to grow, is what I mean, And look at that. So 29% of the revenue comes from land. Then they're an aerospace business. So that's interesting. And look at that. The aerospace revenue is up 20% from the previous year. So aerospace has seen some nice growth. Elbit Systems of America, then the intelligence surveillance. Hey, so a security company. I can see why people like this one. It's an industry that people like. Yeah, look at the net income. Wow. So the sales are up 22% year over year, but the net income is up 45% year over year. So that means they're growing their net margins. Margins grew 20%. So anyway, I like this one. They're profitable every quarter, and I can understand why they're at all-time highs right now. So yeah, let's look at eBay right here. Do you have a stake in so many stocks? Do you worry about over diversification? Not really. Yeah, I probably do own too many stocks, but I just love all of them. And the thing about some people call it diversification. If you own too many stocks, you'll start to match the index and you won't outperform the market. But with all my portfolios, I found that I am actually by a big chunk outperforming the market, even though I own so many stocks. But anyway, let's go look at eBay. And if I go to my portfolio, my main holding, like one stock is like 15% of my portfolio. That would be FIX. It's in this account. But anyway, here's eBay right here. Wow, eBay has had a really nice recovery actually. It's actually pretty close to an all-time high. So you're an e-commerce play, let's see how the business is doing on an annual basis. So, let's just go down here. We can see the analyst expectations. They actually beat the analyst expectations on revenue. The orange line is what the analysts expected, and they came out with 2.58. They're beating on net income. They triple beat. They beat on revenue, net income, and EBITDA. So they're beating the analyst expectations. Yeah, the margins are growing there. Yeah, the margins grew 13%, near 20% margins on eBay. They're making, wow, like close to over 2 billion of net income a year. So it's the PE ratio on this company. The PE is an 18. So even if you buy this, the PE isn't crazy, an 18 PE. So yeah. What's your take on Hood? Yo, Robinhood? Yeah, I do own. Oh, yeah, here's my largest holding right here. FIX, Comfort Systems. It's at the top there. We got 12 shares in them. It's worth 6,500. So yeah, they're a big player. So Robinhood, yeah, this is a fintech right here. I use them. I've given them a lot of fees and stuff, I bet. So anyway, I love Robinhood for the growth. I think the valuation is high. It's tough to buy them right now. If you're going to buy them here, you want to have a super, super small position and then only buy more once it's down like 10% or something. But look at this right here. The revenue is up 50% year over year. Very nice growth. And look at this net income. This is the best part. Robinhood is making hundreds of millions in net income a quarter. Look at that. They're making a couple $100 million of net income a quarter. When if we zoom out, it was a tough buyback here. They were losing a couple $100 million a quarter. So they've just really turned around the business. And that's why they're doing so great. That's why they're at all-time highs. They're also like giving access. They have new innovative products. Like we go to Robinhood right here. A lot of people are on the Robinhood Gold thing. I have my IRA with them. Let's see all the benefits here. Like, yeah, they just had this new thing. Who know? You can like put your mortgage through. I don't even know, man. They're just innovative. Yeah, I love Robinhood for their match feature. We got the Roth IRA match. Whenever you deposit, they match you 3%. So that's cool. If you want to get Robinhood, by the way, I have an affiliate link. It's in the link tree in bio. It's a third link there if you want to get it. I do have my main account here, but you don't really get Robinhood to analyze the company. I like this app for the analysis. eBay has a nice dividend too. Hey, yo, what up, John Timmons? How's it going, brother? How do I know what to invest in each day? You don't really. You want to just dollar cost average. Yo, Dante, dude, no way. Thanks for the donut, dude. I appreciate that. So, someone said, "What's your take on, or what about IBM?" Yeah, let's go look at IBM. I think that's in the quantum watch list right here. So yeah, quantum computing. My favorite quantum plays are Google, Oracle, IBM, Honeywell. These are going to be your industry leaders that have the money and the talent to be the industry leaders. But here's IBM right here. They've been an incredible performer, and you get a nice dividend. So if you buy the stock even now at all-time highs, you still get a 2.3% dividend yield, which is crazy. And let's see. Yeah, look, 40% of the revenue is from software, then they're in consulting, then infrastructure. So I like how diversified that they are. So if we look at the revenue's up 0.5%, 15 billion of revenue a quarter. They're making like close to over 2 billion profit a quarter. So anyway, yeah, IBM's doing good. Thoughts on Nvidia? Oh yeah, we can look at Nvidia as well. So and Amazon, yeah, these are great. So Nvidia right here, I think they're at an all-time high. I think they're at a $4 trillion market cap today. I guess we'll find out. Come on, bro. Come on, Moomoo. All right, there we go. So Nvidia. So yeah, look at this stock. They're literally at an all-time high today. What's the market cap? 3.98 trillion. So the world's most valuable company, worth more than Microsoft. So let's see. Obviously they're huge in GPUs. They have an 18% PC GPU market share. And here's why they deserve all the hype. I mean, the growth is unmatched to any other company. The revenue grew 74%. I mean, look at that. It hits a new record every quarter. And it was 40 billion the most recent quarter. So just incredible numbers. And also the bottom line here, they're making close to like 20 billion of net income every quarter. And it keeps growing. With this growth rate, what's it going to be this time next year? So Nvidia, I do like them. Yo, Beeben said, remember Wolfspeed from last week? I made over 1K with him. Yo, that's amazing you made money on Wolfspeed. That's a company, though, that's super risky. I wouldn't buy that one personally, but I'm so glad you made money on them. I didn't. Maybe did you make money shorting them? So John said Amazon. Yeah. Oh, and Toasty. How's it going, brother? He said, got some General Mills. Yo, we'll check out GIS after this. So yeah, Amazon, I love this company because of the margin growth here. I have been buying the dip on them. I might be biased because I own them, but actually, in the most valuable part of Amazon is the Amazon Web Services. They're the largest cloud provider. It's not their one-day delivery Amazon Prime, but over 100 billion of annual revenue from their AWS, Amazon Web Services. And the best part is the net margin growth here. If we look at the net margin, it's an 11% in the most recent quarter. When if we zoom out, they were struggling. They had single-digit margins. Sometimes, look at that, even negative net margin. So they've really just grown the margins. So net income's up 64% when the revenue's only up 9%. So hey, I love Amazon. They're such an innovative company, They're just going to be winner in the long run. Hey, thanks again, Dante, for the roses, dude. So let's see. Got some GIS General Mills. So yeah, General Mills, this is a food company. They own like Cinnamon Toast Crunch. They're in so many, they own like yogurts, snacks. Or I'll just show you that right here. So yeah, look at this. I can see the data here. Look, 22% of the revenue comes from snacks. Then 15% comes from cereal. Then convenient meals, pet. So there's some like pet food or something. Then, oh yeah, they own Pillsbury. So they got Pillsbury dough, baking mixes and ingredients. And 7% of the revenue comes from yogurt. So they got some yogurt brands that are doing good. So yeah, if we go to the net income right here, this company's, making a lot of money. But if you do notice, the net income did fall 46% year over year. That explains why the stock has kind of been struggling recently. The net income did fall, but I still love this one. They're still making a boatload of money. The dividend's still safe. You get a near 5% dividend yield. So yeah, GIS is cool. They're like a buy and hold one. 3 trillion, 4 trillion here. They're pretty soon you'll be making real money. Yeah. Actually, if we go to the top stocks by market cap real quick, we'll show you. Yeah, look at that top right. Nvidia's worth 3.98 trillion, then Microsoft 3.7, Apple's at 3.1. Yeah, man. Meta's coming for Google maybe. Look, 1.85 on Meta. Maybe they'll take over Google one day. I own both, so hope not. Yo, so I said INOD. So I do own this company. This is actually a growth stock I own in my Roth IRA. So here, I'll show you that. I go over here to my Roth IRA. A Roth IRA is just a tax-free retirement account. I got 9 shares of this company, and we are up, 55% on this one. So yeah, this one's been really good. We're up 55%, But look at this one on the past 5 years. They're up 3,600%. So a lot of people would get scared and probably not buy this company, and I understand that. But I believe this is the kind of company to just keep on growing and keep hitting new all-time highs. This is a competitor to Scale AI. I'm really glad Meta acquired Scale AI because that's the most bullish thing for this, and I don't see anyone talking about that. But they're a $1.65 billion company. So the whole company is only worth $1.65 billion. That means there's a lot of growth, I think, for the market cap. And look, the best part is the fundamentals here. As you know, or maybe you don't know, their main customers, this stock's top customers are literally Microsoft, Nvidia, Amazon, Google, and Meta. And look at this revenue growth. It's up 160% from the previous year. Incredible growth on InnoData. And they're profitable. If you go to the free cash flow, they're making free cash flow every quarter. They're now making net income every quarter. They have no net debt. Balance sheet keeps on growing. So InnoData, I think this one's just going to be a winner. It's tough to buy them right here at this price, though. If I was going to buy them, I'd buy a very small position, wait for them to fall 10%. Only then would I buy more. And if it doesn't, hey, then your original shares just keep on going up. I just bought a lot of XRP and SoFi. What do you think of them? Yo, dude, I love SoFi. We just went over them, so I'll go over them again. But people are really taking, I do own them. People are really taking SoFi seriously, man. They're printing net income. They hit a new 52-week high yesterday. But the growth of the Fintech business, the profitability, yeah, like look at the sales. The sales just hit like a new record every quarter, and this net income. They're finally making a lot of net income every quarter when they used to lose a lot of net income. So I do like SoFi. Let's see, ALLE. What's this one? Yeah, Delta Airlines before calls or puts before earnings. Oh, so that's why people have been saying Delta Airlines. I don't know. One stock I own for earnings today is T-Mobile. T-Mobile reports earnings today. I am down on them slightly. Yeah, look at that. We got 5 shares of T-Mobile. They report earnings in 35 minutes. So in 35 minutes, wish me luck. They're either going to be up or down a bunch. I think the options show like an 8% move. But anyway, let's go look at ALLE. So this is Allegiant, I believe. Maybe I'm pronouncing the name wrong there. But look at them. They've done pretty good the past couple of days here. I mean, look at that. Let's go see what they do, actually. So they just sell products. How's that doing on an annual basis? Well, it's not going to show me, okay? Let's go down here. So revenue is up 5% year over year, 940 million. That's pretty good. But the net income is actually up more than 5%. So if you see the sales are up 5 and the net income is up more than 5, that means they're growing their margins. So yeah, look at that. They grew their margins by 13% to a 15% net margin. So yeah, I like the growth there. Did they pay a dividend? Yeah, 1.3% dividend yield. They grow their dividend every quarter. So what do they actually sell, though? I wonder. They have products and solutions that keep people safe, secure, and productive. Huh. I wonder what they sell. All right, let's see. Show us Caterpillar stock. Oh, I want to look at Lockheed Martin, too. So Caterpillar, this one is like a low valuation company. I love how diversified that they are too. You get a nice dividend with Caterpillar. Look at that. Caterpillar is nearly at an all-time high. And even if you buy them now, you still get a decent yield. A 1.4% dividend yield with this company. And look at where the revenue comes from. It's diversified. 50% comes from their energy and transportation. Then they're in the construction industry. And then what's the next one? Resource industry. So for like mining companies. They need to transport a bunch of like iron ore or something. But yeah, look at this net income. It did fall 30% year over year, but still they're printing money. 2 to 3 billion of net income every quarter. Then they have a low dividend payout ratio. They're probably doing stock buybacks. So yeah, I like Caterpillar. The PE is like a 20 on that one. So LMT, this is Lockheed Martin. This is your aerospace and defense company. So yeah, a lot of contracts with the military here. So let me show you this. The PE is a 19. So first of all, they're at a pretty fair valuation, a 19 PE. And look at this. I love how diversified that they are. They're in aeronautics, rotary and mission systems, missile fire control, and then the space industry. So yeah, I like this one. If you go to the net income, last quarter they had a little one-time adjustment there, but they're always making, 1.5, 1.7 billion of net income a quarter. So I do like Lockheed Martin as an aerospace and defense play. Let's see here. How is PE calculated? It's just the net income per share. So it's basically the net income multiple plus any stock buybacks or stock dilution. Because if it's the net income per share and there's less shares outstanding than the previous year, you get slightly more net income per share. It makes the EPS go up. But anyway, PE is just a net income multiple, pretty much. But sometimes a company like a Lucid, their net income could go down 10%, but the EPS could fall 20% because there's more shares outstanding. They're diluting you, even when the stock's at an all-time low. So yeah, that's what you got to be careful of. Like, let's see, net income was down 46. Oh, you know what? I'm not even gonna cover Lucid. I feel bad if you own that one. All right, so he said do AEAV. Yo, let's check this one out. So, I can't find the one. AEAV. Yeah, that one doesn't exist, or I can't find it. I thought T-Mobile earnings were on the 23rd. Well, let me check for you. You know what? We'll go to the earnings hub right here on Moomoo, and we'll see what reports earnings today. Because I thought they reported earnings on Wednesday. Maybe I was looking at the wrong week. Hold on. Yeah, I guess they don't report earnings today. Am I really? Did I really look at the wrong thing? Shoo. Well, I guess so. Yeah, okay. Sorry. Yeah, I don't think T-Mobile does report earnings. You think Nvidia will hit 200 or dip to 120? I have no clue, man. You know, Nvidia's already a 4 trill. Maybe they could go up a little more. I don't know. Sorry, I meant AEVA. Okay, we'll see. Eva Technologies. I'm about to end the stream here as well. If you guys got any last minute stocks, I'll check them out for y'all. But if you want to support me, best way to support me, the only way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's in the link tree in my bio. I don't sell anything. I don't got a course, a book, a Discord. I don't got none of that. I'm just on here giving my opinion. Nordisk? Yo, Daily, what's up, dude? What's the ticker symbol for Nordisk? You talking about Novo Nordisk? So here's Eva Technologies, a $1.7 billion company. They've had a very nice rally the past couple weeks here. I mean, look at that rally. So let's see if we can figure out why product revenue. I mean, it really beat on analyst expectations. Still, it's small numbers, very small numbers. Like, look, 3 million, but it did increase 60% from the previous year. So it is headed in the right direction. And so look at this. They lose a lot of net income a quarter. Look at that. They lose 30 million of net income a quarter. That has to come from somewhere. And so if you're wondering, like, hey, why is their assets going down every quarter? Well, that's where the net income is being taken away from, their cash pile. So unfortunate. Yeah, let's go see cash and equivalents. Yeah, look at their cash pile. A year ago, it's on the top left. It was 189 million. Now their cash on hand's only 81 mil. So it's tough when they have less than a year left of cash unless they dilute you, which they probably will. But anyway, I like the growth there. You streaming from your phone? Yes, sir. What up, Gilly? Yeah, I'm streaming on YouTube and TikTok right now. I'm Apple playing my phone screen to my computer. Look, I'm on my computer right now. Yeah. Anyway, let's keep going here. We'll look at a few more stocks. How are you? Yo, what up, Dar? Doing good. How about you? So I said TBLA. What's this one? TBLA. Are you a day trader? No, I mainly just buy and hold stocks for the long runs. Sometimes I'll swing trade some companies. So Tableau.com. So $1.2 billion company, not big, they IPO'd pretty recently. They IPO'd in 2023. Well, hey, the Wi-Fi's acting up. Good thing we're closing toward the end of the stream here. So revenue's up 3% year over year. Not great. You know, revenue's up 3%, but they're struggling with profitability, but the trend is getting better. You know, probably this time next year, they'll be making net income. Hopefully. They made 33 million last quarter. I thought that was like a one-time adjustment. No, that was real. Wow. They nearly made 50 million last quarter. Oh, look at the largest shareholder. I didn't know that. Hey, Yahoo is the largest shareholder of this company right here. Is Yahoo public? I don't think they are. Yahoo? Yeah, I don't know. Anyway, well, Yahoo is the largest shareholder. That's interesting. Love your content. Hey, appreciate you. Where's my fork? Uh-oh. That's not good. Oh, hopefully we're back here. Yeah, anyway, hey, thanks so much. Where's my fork? I appreciate you, brother. What kind of companies you think? Well, I guess hopefully, I don't know what's happening, but I'm about to end the stream here. I do really appreciate y'all being here. If you want, I'd really appreciate if you hit the like button for me. Hit the follow button. We go live every day. Yo, Blue 4. No way, Blue. Thanks so much for the 55 goats, the 55 roses. Thanks so much, Blue 414. Hopefully you can hear me. I don't know if the Wi-Fi is still terrible. I'll talk for a couple more seconds here if it doesn't cut out. But what kind of companies do you think we should invest in? I'll tell you what I literally just bought today. I bought 2.4 shares of Progressive. This is an insurance company, PGR. I really like that one. I also just bought a share of ticker symbol COKE, Coca-Cola Consolidated. Yo, Toasty Alpha, thanks so much, man, for the sub. I really appreciate you, man. Yeah, we go live every day, twice a day. If you missed anything, you can watch it on the YouTube replay. Yeah, that's pretty much the stream. I'll do a quick portfolio update. Let's see how the S&P 500 is doing real quick. So, and here we are up 1.52% on the day. That's actually pretty great. Literally every stock in here is up on the day. Let's see how the S&P 500 is doing. So yeah, look at that. The S&P 500 is doing great. Go check your portfolio. Hopefully your portfolio is doing pretty good right now. The market's up 0.5%. We're pretty close to all-time highs. Nvidia is at an all-time high today. $4 trillion company on them. That's crazy. And yeah, that's the stream. Again, I don't sell anything. I don't have a course, a book, a Discord. Only thing I do have is a YouTube channel. So again, if you want to help me out, subscribe to my YouTube channel. Or actually, that's it. Anyway, see y'all later. Hope you have a great rest of your day. And thank you to y'all on the YouTube stream. TikTok is not too happy with me because they took down my stream earlier.